Hey guys, it's Matt. So today we're going to talk about the market crash. And everybody that's out there, that I read a lot of articles on it, I've talked to other investors about it, and everybody's trying to speculate if there's going to be a crash, when it's going to happen, what it's going to look like, and what we should do and everything like that. So here's my opinion about the market crash. And here's what's interesting. I can't deliver facts about the market crash because nobody can. And there's going to be people that are going to talk about, in the comments below, about maybe they're going to differ from some of the things I'm going to say about the market crash. And I relish that because it's good conversation. But the bottom line is, everybody's crystal ball is broken. Nobody knows what the market crash is going to look like, if there is going to be a market crash at all, or what's going to look like if it does hit, okay? So that being said, all we can do is look at the data we have in front of us and try and make good decisions and predictions, based on what's here, right? So let's put that out there right now before we go any further, that nobody knows if this thing's going to happen or not, and if it does, what it's going to look like. But this is my opinion of what I think the crash is going to look like, and if there is going to be one, and all that. So let's get into it, okay? Okay. So here are the reasons for a potential crash and like the pros, if you will, like the pro crash, okay? So let's say crash. Awful handwriting. Okay. And then I've got the no crash section over here, okay? Why there won't be a crash, or maybe areas that won't crash at all, okay? So here's the biggest reason that I've heard people say, this is bugging me, there you go, crash. Here are the biggest reasons why I hear people talk about a crash, is because we're due, okay? That's something somebody playing roulette in Atlantic City says. That's why you play the number 10 on the roulette wheel in Vegas, is because it's due, because it hasn't hit in a while, right? The fact that we haven't had a market correction or a crash in the real estate market for the last 10 years is not a reason why it's going to crash. And that's the biggest argument that people will give you. Oh, we're due. It's 10 years since the last dip. Okay, so it's 10 years since I was 10 years younger too. So it's because we're due is the biggest reason why people give. Now, I automatically discount that reason because it's got nothing to do with anything. Now, here's where that does play, okay? The fact that we're due or whatever. And it's not in the real estate market, it is in the stock market, okay? And they are similar, but they're not the same. And if you look back through history, and if you chart out real estate prices and you chart out stock market, they're not automatically like when one goes down, the other one doesn't automatically go down. They're related because money for real estate financing leans back onto Wall Street, okay? But one does not control the other. They're related to each other though, okay? And the stock market leans on real estate just as much. Like if real estate takes a crash, construction and things that benefit from the sale of real estate all take a hit, which then affects the stock market. Now, the reason why I think the stock market's going to crash is because if you look at the performance of companies and if you look at what's really happening in industry, it's got very little to do. The increase in the stock market doesn't reflect a true increase in the economy by the numbers that I've seen. So I think the stock market's overheated compared to what our economy really is in this country. So I think there will be a stock crash. Is that going to affect real estate? Probably. In areas where they're really lenient upon Wall Street, like New York or something like that, if the stock market does take a big dip, then yeah, people will lose their jobs and there'll be a dip in the economy in areas that are leaning upon the stock market, or if a specific industry takes a hit or something like that, then yeah, this will affect that. But it's not an automatic thing, okay? Now, it's my unsolicited opinion. I'm not an advisor on stocks or whatever, but I do think the stock market's going to take a hit in the next, say, 6 months. For some reason, the stock market tends to always crash in October. So put an asterisk out here and watch this video again in October and see if I was right or not, right? So the next reason why people point to a potential crash, and I think this is one's a little more valid, but there's more conversation behind this. And this is the high velocity of sales, meaning things are trading really, really fast, and properties good properties are getting just ripped off the market really fast, and prices have gone up. Price increases. Okay, now here comes Matt's opinion on that. Okay, and I've talked to economists about this. This isn't just me making things up. I've talked to economists on why these two things are happening, and they are happening, and they're happening more in certain markets than others. And I should put an asterisk out here, right? Real estate's not the stock market. Stock market happens all online and perhaps a bit on Wall Street and everything like that, but it's in one solitary location. Real estate's all over the place. To say the real estate market's going to crash, you can't really, unless the entire backbone of the industry is going to break like it did in 2007. There's no indication that that's going to happen, by the way. But real estate is market specific, and so like I said, if the stock market takes a dip, then the stock market in, let's say, New York or whatever may take a dip because of that. But that has nothing to do with the market in Albuquerque, New Mexico, or in San Francisco or whatever, right? Now we'll get to those types of properties in a second, like the A+ high-end stuff. But the reason that we're back to my asterisk, okay? High velocity of sales and price increases, I think, have to do with pent up demand. Now, here's what I mean by that, okay? When the market crashed, I was around for this, some of you guys weren't, but I was around when the market crashed in 2007, and everything stopped from like 2007, 8, 9, 10. No, it was very hard to trade real estate on a market rate level. Like if you're flipping houses, it was hard to make that happen because people couldn't get financing. They couldn't get banking. The end buyers couldn't get banks for fix and flips. For stuff that you produced as a flip, which slowed down things for wholesalers who were trying to sell fix and flips. If you're going to pick up rentals, banks got really skittish and valuations went way down on the rental market, so it was very hard to get financing on the rental side. I mean, everybody turned to private money, and it was easy to get private money back then because the stock market crashed at that point at the same time because the financial markets really what crashed, which affected this. But at that time, people wanted another place to park money, so it was easy to get private financing, but it was very hard to get just regular, straight-up bank financing. It's become much easier to get that, but it's still, you have to go through, there's the days of no-doc loans and zero down everywhere like it was happening in 2005, 6, and 7, which caused this crash to begin with, is not happening again. It's a solid finance market. The homes that I sell, the people have to jump through a bunch of hoops to get financing, and properties don't appraise sometimes. And so it's a regulated check and balanced market right now. So here's when I say pent up demand is, in 2000, like say 10 through or 7 through 10, people couldn't get into housing. They couldn't buy end buyer houses for themselves to live into, and also they couldn't sell their own house. So this person whose house was worth $300,000 and the market crashed and the house is only able to sell for $150,000. Well, some people took a short sale because they lost their job or for one reason or another. But the very house I live in, I couldn't sell for what I owed on it because the market took a dip. So I did what many, many, many other Americans did. I just stayed in my house and kept on making the monthly payments. I just stayed in there and hunkered down. Now I can sell my house because the market's come back up again. What that's done, because the market's come back up and increased, it's allowed for homeowners that have owned their homes and wanted to move a while ago to sell their house, and then they can trade their home and buy into a larger home or move or whatever it is they wanted to do to upgrade, their living situation and everything like that. People are now able to begin the real estate cycle of selling, buying houses again, which they weren't able to do not too long ago, okay? That's number one. Number two, when I say no crash, which is causing this high velocity of sales, this is what this is related to, I think, is millennials. So plenty of millennials are watching this right now. You guys are starting to buy houses. And a lot of the houses that millennials are buying are in urban communities. We do a lot of work in Philadelphia. We're doing work in Brooklyn, New York. And millennials are buying a lot of houses in urban environments like that for the first time. They're going out of renting and buying. A lot of people thought millennials will never buy houses. They're the different generation. They're going to do things differently than everyone else. No, when they reach a certain age and they start starting families, That's just what people do. They buy a house, they settle down, and so millennials are now new home buyers coming on. Millennials are a large market share, and they're starting to buy homes in certain markets, okay? Price increase is just due to this. It's due to more millennials and pent-up demand of people that have been hanging onto their houses that are finally selling, that are pushing it, that are pushing more volume in, okay? Now, that's why I think this is happening. Again, you can argue, please argue with me. Tell me why I'm wrong that we are going to see a crash. But the bottom line is I don't think we're going to see a crash because of high velocity sales or because that we're due, okay? So, here's what I do think, okay? I do think that in some ways we will see we will see a crash, okay? So, but again, because I said before, here's my yes and no list, right? I think we will see a correction, let's call it, but it's not going to be an enormous thing like happened in 2007. And it's not going to affect the entire market like 2007 did, okay? And 2007 didn't affect the entire market. Actually, multifamily went up in 2007, 8, and 9 because people couldn't afford to buy houses anymore. They started renting, which is what caused the multifamily boom we're seeing now, right? So that leads into my next thing. Multifamily, and this is specifically B plus to A plus multi, is going to have a correction, not a crash. It's not going to get cut in half. So if those of you guys are sitting on your hands and with lots and lots of money or lots and lots of investors looking to buy deals, waiting for all of multifamily to hit the floor, it's not going to happen, in my humble opinion. But I think there's been a overbuilding. This is what my studies have seen of B and A level properties. This is like high-end schwanky stuff with pools and granite and stainless steel and doormen and the whole thing for A plus new construction apartment buildings. There's been way too much of these built in the last 5 years. I got a friend of mine that lives in Philadelphia. His apartment complex, to renew his lease for 2 years, he just signed up on a 2-year renewal. They gave him 3 months for free. 3 months, because there's become an overbuilding of apartment buildings in Philadelphia, and it's good. There's been a lot of jobs that are coming in. There's a lot of reasons why people are building lots of apartment buildings there. They're building them elsewhere. It's not the only place this is happening, but there's been an overbuilding of apartments everywhere that I've seen in the U.S., and everybody's building A and B stuff. That has to do with the cost of construction. That's the only stuff you can build and make money, is the high level stuff that's like luxury priced towards the top of the market. So I think that the owners of these properties are going to have to start taking a haircut on the rents that they're getting, or they're going to lose them. And there could be an opportunity to go buying properties like this, but it's not going to get cut in half unless you catch a really good deal. So that's number one, yes, market that's going to crash. The next thing, let's say. The next thing that's going to go down, I think, is vacation rentals. Okay? Now, humble opinion, but I think that has to do with that. Okay? That if the stock market or if the economy peels back and stocks pull back and everything like that, the first thing people start doing is they start tightening up their purse strings, and unfortunately, for the fun seekers in the world, the first thing they start doing is peeling back on their vacation. They cancel the vacation, they stop renting second homes, or they sell their second home altogether, whatever it is. So I think vacation rentals are going to take a dip only if that happens, okay? Only if the stock market takes a hit, okay? And the last thing, a lot of people are talking about this. The next thing I'm going to say has nothing to do with any of this. It just has to do with the way that people are doing commerce these days, and that's retail, okay? That means that America is starting to, the world is starting to change the way that we shop. And this is like totally old news, but everybody's buying stuff online, on their cell phone, on Amazon, this and that. And walking into a store and trying on a pair of shoes or trying on a dress or buying a physical thing and walking out with it is becoming less and less common. You guys all know this, but there's going to be a real opportunity to repackage and reshift retail stuff like shopping malls and things like that. How to repackage things that are large retail centers and turn them into things that are useful again. There's companies out there that are taking big shopping malls and converting them into apartment buildings. How cool is that? That's awesome. That's a really cool project, by the way. If anybody knows of anything more like that, leave that in the comments down below. I'd love to talk to you about those types of things. But that's another thing that's going to take a dip. Now, I also submit that B and A plus housing for sale is also going to take a dip. When I say B and A plus, these are, again, high-end stuff also, like granite and stainless steel, but these are things that are also luxury in general. So people that are developing high-end luxury homes that are priced in like the top 10 percentile of affordability in a market, I think those are going to take a dip because of this, but because it's just a glut of over-developing these things. These millennials don't all need to have the absolute highest price point, and people trading out of their home don't have to have the absolute highest luxury piece that they could get. So I think those homes may take a little bit of a price cut, or if you're developing stuff like that, you're not going to make, maybe you might not make as much as you thought you were going to make. My 2 cents. Now, here's where I think it's not going to crash, okay? This is B-level and C-level multi, okay? Call this workforce housing. Call this the stuff that's affordable at the median income. If you look at the median income of the area that you're in, that you're looking, if people can afford at the median income to live in the multifamily or the rental that you have, I think you're gonna be okay. Because I don't think that the middle part of the country, middle America, let's say, the median, you know, not the geographic middle, but the economic middle, is gonna be affected by that, or by anything else that's gonna happen in the real estate markets. I think that's gonna stay fairly stable. I think that this is gonna happen, this crash is gonna happen towards the top, right? So that's the first thing that I think is gonna be okay. And I think that starter level homes, in my part of the world, starter level home is somewhere between 150 to like 400,000. Once you get above that, you get into the luxury space. So I think that starter level houses are going to be okay, because there's nothing that shows that these guys are going to stop buying as long as they can keep getting money, and there's nothing that shows that these folks are going to stop selling their houses and either downsizing or trading up because they have a kid or whatever it is. That's that. So again, here's the bottom line for all you guys. This is a really long video. I hope you guys watch this whole thing, so I'll leave a little nugget at the end for you. There's folks out there that I see on BiggerPockets, I've had conversations with people directly, that are not taking action because they're waiting for a crash. And I think that's the worst thing you can do. Take action, go forward, just collect the right data, make the right decisions, and don't get into super speculative stuff, especially in high luxury, okay? If that's where I think I would stay away from. That's just higher risk, higher luxury stuff. I'm turning down deals that are in the high luxury space right now. So, but don't sit on your hands. Don't take no action. Just go forward and take the right actions, take conservative actions if you can, and don't use this potential crash that may not happen, by the way. Don't use that as your reason for you not to take action, because it's very comfortable to not take action. And to hang it on something like, well, I'm not going to buy real estate right now because it's going to crash. No, just collect the right data. There's always the right time to invest in real estate. You just got to have the right data and make the right decisions. And if you think there might be something, then just be a little more conservative, but still get into the market. So again, this is a very complex conversation. There's a lot of moving parts here. Of course, I left a lot of things out because there's only but so much time here. I really hope to have a good chat, because I'd like to learn some more from what you guys think too of this. Because again, nobody has a crystal ball. You guys have an opinion. This is just mine. I'd love to hear what you guys have to say about it too, so we can maybe learn something from each other. So that's all I got, guys. I'm out of breath. Thank you so much for watching. As always, I appreciate you, and have a great, profitable week.